This video provides more detail about the statement of shareholders' equity. The statement of shareholders' equity explains the changes in the shareholders' equity balance sheet accounts between 2 points in time, in this case for Harbor Island Company, the beginning of 2000XX and the end of 2000XX. While in reality there are a number of shareholders' equity accounts, they all fall into two basic categories: contributed capital, which represents direct investments in the company made by the shareholders, and earned capital, most of which is called retained earnings, which represents past profits reinvested in the company. That is, the shareholders have not withdrawn all the profits in the form of dividends. Together, these two accounts reflect the total investment made by the shareholders in the company. Harbor Island began the year 2000XX with a total investment by its shareholders of $9,835, made up of $9,450 in contributed capital and $385 in retained earnings. Harbor Island ended the year with a total investment made by the shareholders of $10,935, made up of $9,550 in contributed capital and $1,385 in retained earnings. Thus, during the year, the shareholders' investment increased by $1,100. $10,935 minus $9,835. This change in the shareholders' investment was caused by four items, all disclosed on the statement of shareholders' equity. First, Harbor Island generated net income of $10,000 during the year, which belongs to the shareholders, meaning that they have the right to withdraw it or leave it reinvested in the company. The statement of shareholders' equity indicates that $9,000 was withdrawn in the form of dividends, leaving $1,000 in the company and consequently increasing retained earnings by $1,000 from $385 to $1,385. It also appears that during the year, Harbor Island issued additional stock to shareholders, increasing contributed capital by $700. And finally, the statement indicates that the company bought back some previously issued stock for $600. This treasury stock purchase reduced contributed capital and the investment made by the shareholders. Treasury stock is discussed and illustrated in prior video 17 of this series entitled Treasury Stock. The overall result is a net increase in contributed capital of $100, an increase of $700 due to the stock issuance, minus a decrease of $600 due to the treasury stock purchase. One final observation: the cash flows associated with dividend payments, stock issuances, and stock repurchases can all be found in the financing section of Harbor Island's statement of cash flows, the detail of which is provided here. This concludes our discussion of the statement of shareholders' equity, a financial statement that describes the changes in the investment in the company made by the owners or shareholders during the year, in this case 2000XX.